Hello and welcome to the Real Estate Edge. Oil is considered to be the lifeblood of modern economy. The oil and gas industry is known for its fluctuating prices that even Wall Street can't predict. It's hard to find an industry more global, more complex, and affects every country in the world. To help us better understand the oil industry is today's guest, Andrew Inkpen, Professor of Global Management, Thunderbird School of Management, Arizona State University in Tempe, Arizona. Andrew, thank you very much for your time and willingness to be with us.
Thank you. Happy to be here.
Well, let's start off with a real simple question. We frequently hear the term oil and gas. Can you just tell us what the difference is?
Well, oil is a liquid and gas or natural gas, of course, is a gas. And it gets a little confusing because we put gas in our gas tanks and we have oil and gas.
Indeed. I guess that's the confusing part.
Yeah.
Are there different categories of oil, or is it all the same?
There are different types of oil. I mean, there's more sulfur or less sulfur, and different different chemicals in the oil. So yes, there are different types of oil, but ultimately it all gets the refinery can deal with those differences, and the goal is to turn it into a product that we can use in our cars, our trucks, etc. So
sure,
oil. When we hear the price of oil quoted, that's a benchmark price, and different grades of oil might be more or less valuable than that benchmark. But so yeah, there's different types of oil, but I think for the average person, all they need to know is that crude oil is a globally traded commodity.
Sure. Well, is oil itself a finite resource, or is there an adequate supply for years to come?
I think there's an adequate supply for really forever. The amount of oil we have is really dependent on the price you get for selling it and the cost of developing and producing it. And technological advances continue to make what was once very difficult oil that's available to be produced. So we're never going to run out of oil. That's not an issue.
Well, that's encouraging to hear. That I guess takes care of the next question, which was how many years of oil supply do we have left in the world given the current consumption? But your answer is encouraging. Once crude oil, and you touched on this before, but once crude oil is extracted, then what's the next process? How does it become a usable product for consumers?
Mm-hmm. Well, once crude oil is produced, the next step is transportation, and that's transportation to a refinery. Crude oil is only useful once it's refined. So we have to get it to a refinery, and that's by ship, by pipeline, by truck, however you do it, it's got to get to a refinery. And, the refinery then transforms it into useful products, gasoline, diesel, propane, things like that.
Sure, and other usable products. How many different products are derived from crude oil?
Wow. Well, I mean, of course, there's most of the crude oil in the United States is transformed into transportation fuels, gasoline and diesel. That's where more than 50% of it goes. But then we have a whole range of different products. We have, the asphalt that we, build our roads with. We have the fuel that moves ships. We have jet fuel. We have heating fuel. And we also have crude oil that can be used as an input to petrochemicals. And, once crude oil, more typically natural gas in the United States, but crude oil is also an input. Once we introduce crude oil and natural gas into the petrochemical sector, there are millions of products that end up being made out of fossil fuels. So there's no limit to what we can do with plastics, of course, and petrochemicals.
Sure. Many consumer products and many products that are used in the construction and building of buildings, homes, commercial buildings
Absolutely.
as well.
Absolutely.
You mentioned that the process starts with drilling crude oil, then it goes to refinery. Is the refinery capacity adequate to process all the crude that's being delivered?
Yes. I mean, I guess if from a global perspective, yes, there is adequate refining capacity. It's, it's a pretty tight balance. And it goes up and down. Refining is historically not a particularly profitable part of the industry, and we have seen a lot of refinery closures in the United States over the past 20 years.
Is that strictly an economics issue or profitability management related, perhaps, to that particular refinery?
It's typically a profitability issue. These are older, smaller, less complex refineries, and they typically struggle to be profitable. So a lot of East Coast refineries that were built 40, 50, 60, 70 years ago have been closed.
Andrew, can you give us a simple explanation why gasoline prices for our automobiles have jumped, in some cases, over $1 in the last few months, few weeks?
Well, the simple explanation is that crude oil prices have jumped, in significantly over that period of time. The more complex question, though, is why have crude oil prices jumped? As we said, gasoline prices, the movement up and down is largely a function of crude oil prices. Crude oil is a global commodity. When crude goes up, gasoline prices go up. It's simple as that. That's not complicated. What's complicated, though, is what drives crude oil prices. And if you can predict that, you can make a lot of money. But that's the complicated question. But the simple answer to why have gasoline prices gone up? Crude oil prices have gone up.
Okay.
The refiner has to pay more for crude oil. They then have to sell it for more. That translates into higher prices at the pump.
Sure.
Not complicated at all.
Understandable. Would you say these increases of crude oil, are they technical reasons, production issues, or more political?
I think right now it's a political issue. There's no real technical barriers to producing as much crude as the world needs, but there are political issues that have. I mean, for example, we've got sanctions on Venezuela. Venezuela, in theory, could produce a lot more oil, but we've restricted the ability of Venezuela to be that producer. So that's a political issue. That's not a technical issue.
Sure. Is oil found in most countries, or are there concentrations in parts of the world?
Well, yeah, oil is not found in most countries, and as they say, God gave some countries oil, and other countries didn't get it. So France didn't get any, Switzerland didn't get any. The United States got a lot. Saudi Arabia got the most. There's a lot of countries that have oil, but there's a lot of countries that don't have oil. Most of the European countries don't have oil.
I see. Well, you answered my next question. You said Saudi Arabia is the single biggest oil producer.
Yes.
Currently?
Well, I think the United States is the largest producer. Saudi Arabia, though, has the capacity to produce, over the next 30, 40, 50 years. Saudi Arabia will be the largest producer. Mm-hmm. But the U.S. is up there. The U.S. is it's the largest producer of liquid hydrocarbons right now.
Well, at one time it was said, at least on the news media, that the United States was an exporter of oil. But in the last couple of years or so, that seems to have changed. What's happened? What drove that change?
No, the U.S. is still an exporter of oil. That hasn't changed. The U.S. is an exporter of oil, but it's also an importer of oil. So,
why both?
Well, if you look at the numbers, the U.S. consumes about 20 million barrels a day. the US produces slightly more than 20 million barrels of liquid hydrocarbons per day. So you could say, well, we're energy independent, but we're not, for a couple of reasons. Some of the oil that's produced in the United States needs to be exported because there isn't refineries that can handle it. So, we export that oil. We've got refineries in the US that don't have easy access to US oil, so they have to import oil. So the US is an importer and an exporter. It's a net, if you look at the production versus consumption, the US does produce slightly more than we consume. But we also export and import both. We do both.
For different economic reasons, it sounds. What country is the biggest consumer of oil?
The US.
The US is, by far?
Yeah. I think US is number one, China is number two. I'd have to look at the numbers, but the US is number one.
Is that primarily because of our fascination with automobiles, transportation?
It's because of the size of our economy. The largest economy in the world will consume the most energy. And we have the largest economy. China's number two, so it's the second largest consumer. But we also have, a very sophisticated transportation infrastructure here that's heavily reliant on hydrocarbons to run it.
Does the U.S. import oil from Russia currently?
Until the Ukraine war, yes, we did. Not very much, but we did.
And that's been terminated, I assume?
Yes. It was, if I recall, it was maybe 6 or 7% of U.S. imports were from Russia. And
so a relatively small amount.
Yeah. And remember, imports as a percentage of U.S. consumption is a very small number. So 7% of a small number was replaceable by other oil.
I've read that the European Commission or Union has placed a ban on further purchases of Russian crude oil. Has that been completed? Is that so? And if that's a fact, to what extent will that impact prices?
Well, the EU wants to ban the import of Russian oil, but decisions in the EU have to be unanimous. And there's one holdout, and that's Hungary. So Hungary has not yet agreed to ban Russian oil. So as of now, the ban does not exist. And until they solve the Hungary problem, it will still be, let's say, under negotiation. It will probably happen. And I don't think it will have much of an impact on price. Though that decision has already been priced into the markets.
Is oil, do you envision that the price of gasoline will continue to increase? I've heard some estimates that we may see $10 a gallon. Is that realistic at all?
I don't think it's realistic. I mean, there is the global markets exist in a pretty tight supply-demand range. And when one of them gets out of whack, we see the kind of impact we're having right now. And, in 2020, we saw the opposite. We saw demand fall, supply was still higher, and, we had a precipitous drop in gasoline prices. I remember in 2020, you could find gasoline prices of close to $1 a gallon in Texas. Now it's gone the opposite way. We've got a constraint on supply. Demand is rising. The post-pandemic economy is very strong. And so we've had a run up in price. But history shows us that, over time, we get back in balance. And, we are going through a transition away from fossil fuels. That is happening. So, we will probably have a few years of fairly, in my opinion, and, it's just my opinion, we'll have a few years of high fuel prices. But I don't think we're going to see $10 a gallon.
Good.
Unless, barring some disaster where, Saudi Arabia dramatically drops production, or there's some kind of uprising in Saudi Arabia that damages their productive capacity. I can't see it happening.
Or some other black swan event that just can't be anticipated currently.
Exactly.
I have heard it said that we do not have a production or quantity problem. We have a distribution problem, and that's causing the price of gas at the pump to go up rather dramatically. Is that a fair analysis?
I don't think so. I mean, the price you see at the pump is, I mean, the movement up and down in price is a function of the global price for the commodity. You know, there are fixed elements of that price, you know, the taxes and, you know, some of the distribution costs and so on, some of the refining costs. But the big movements up and down are tied to the price of crude oil.
Mm-hmm.
And
have you seen, or do you measure, does the retail industry enjoy the same margin today as they did 2 years ago?
yeah, it's a few cents per gallon. It's not much.
Mm-hmm.
You know, you know, when the price of crude oil rises dramatically, they tend to benefit when they've got some product in their inventory. You know, they can sell it at the higher price. But, you know, at my local Costco, they get 4 or 5 truck deliveries a day. So, you know, they don't have any inventory. It's as soon as they get it, they sell it. So they make a few cents a gallon.
Sure.
And that doesn't change.
Well, if that margin is the same, but yet we've seen crude oil increase from $50, $60 a barrel to over $100 now, what's caused that dramatic increase? It seems like somebody is making a relatively strong profit. Is that a wrong assumption?
Yeah, I mean, when crude oil prices go up, the producers make a lot of money. Saudi Aramco, ExxonMobil, the Russians, you know, that's the people that produce crude oil benefit in a high crude oil price environment.
Well, with that increase in profitability, are we seeing an increase in production, or is production pretty consistent, pretty level?
Production's pretty consistent. I mean, one thing we've seen in the United States, especially after the pandemic years where crude oil prices fell so significantly, we've seen a lot of companies that are very focused on profitability and not on production. In a sense, they're not trying to increase production. They're trying to get profitable, stay profitable, at which point they will then perhaps think about increasing production.
Sure.
So,
let me ask you this. Does a gallon of crude, or for every gallon of crude oil, is there a gallon of car or airplane fuel created? Or is there a margin there that is just lost because of production?
No, there's not much that's lost, but you can't turn a barrel of crude oil into a barrel of gasoline. You'll turn it into a certain amount of gasoline, a certain amount of diesel, a certain amount of jet fuel, a certain amount of what they sometimes call bottom of the barrel. You know, that's kind of the heavy residual that's left over that can't be refined to a liquid, but you know that goes into bunker crude for bunker fuel for ships.
So that sounds like that's a technical issue and not a management decision, that X% goes to provide fuel for cars or airplanes, but it's a technical refining process.
That's correct. I mean, a profit-oriented refiner is going to want to refine the product into the most valuable products. And the most valuable products are transportation fuels. But there's just some of it they can't. So some of it will end up, to make asphalt for roads. You know, that's very heavy, the kind of heavy stuff you need to make asphalt, which is still profitable. But, right now, the most profitable product is diesel. If you can make it.
Is the oil industry highly regulated?
Yes. It is very highly regulated across the board. Now, of course, that differs from country to country, but certainly refineries are very highly regulated. They're very dangerous if they're not properly managed. So, tremendous amount of safety regulation. In the upstream, of course, the risk of environmental disaster is always there if you don't manage the product properly. So, yes, very highly regulated.
Andrew, you mentioned that diesel fuel is a little more costly. Why is that? What is that, a refinery issue or?
Sorry, you mean the price? The price is higher.
Yes.
Yes, the price.
But why?
Again, supply demand. The demand has been rising. As the economy's grown, the demand for truck transportation and commercial uses has gone up, and there are some constraints on the supply of diesel fuel in the world. So, we do tend to see much higher prices for diesel than we do for gasoline. Again, it's a supply-demand imbalance.
We frequently hear the term OPEC. Can you define what OPEC is, who they are, the influence they have on production?
Mm-hmm. Well, OPEC is a group of countries. It was started some years ago. I think it was led by Venezuela, which at the time was one of the world's leading producers. And right now it's really led. Saudi Arabia is the big gun in OPEC, but it's Saudi Arabia, some other Kuwait, UAE, some African countries, and it's a classic cartel that basically gets together, talks about supply, talks about production, and tries to manage price through its cartel decision making. Mm-hmm. And they control a very, very significant share of the world's global oil production. But the United States is not part of OPEC. The United States is the world's largest producer. Canada is not part of OPEC. Russia is not part of OPEC. So OPEC does not control all of the oil that's produced in the world. And their power has greatly diminished over the last several decades. As the US became the largest producer in the world, that took away a lot of power from OPEC. But they still have the ability to impact supply and consequently to impact price.
Why is the United States and Canada not members? Were we not invited, or do we choose not to be part of the organization?
Well, it would be illegal. We don't allow cartels in this country. They're illegal. So we just don't. I mean, it's just not part of our free market ethos here in this country or in Canada.
So it sounds like OPEC's objective is twofold. One is to manage supply, production, and that probably can't be done without some degree of interest in managing price. Correct. Is that a fair summary?
Yeah, it's exactly. It's to manage production, supply, and price. They walk a thin line, because if they drive the price too high, of course, we move away. We start buying electric vehicles and move away from fossil fuels. If they drive the price too low, they don't make enough money to support their economies, because all of the OPEC countries are heavily dependent on oil revenue to support their economies. Mm-hmm. So they don't want the price to go too low. They don't want the price to go too high.
Of course. Reportedly, 71% of crude oil consumption is used to produce fuel for transportation, cars, trucks, etc. Is that a big economic risk for our country?
Well, it's been that way for a long time. I think it was a bigger risk when the U.S. was a much larger importer of oil, which it was 25, 30 years ago. But yes, I mean, it is a risk in the sense that we are reliant on a global commodity over which we don't control the price. But I think the risks in the U.S. are far lower than they are in countries like Germany or France or Japan, which don't have, do not produce any oil themselves. So I think our risks are very different than those countries.
Mm-hmm. I have read that the U.S. was an exporter of oil several years ago, as we talked earlier. Now we are an importer and exporter, you said earlier.
Yep.
I'm not quite sure that I understand how that impacts pricing. It seems like if we were an exporter, we have an abundance, but if we're an importer, there are needs. So does it break down to different types of oil? Or are these more political issues?
No, it's not. It's not a function of the type of oil. I mean, it's a function of the fact that oil is a global commodity, and that regardless of what country you happen to be in, for example, France does not produce any oil, but their refiners are paying the same price for oil that the U.S. refiners are paying, even though the U.S. is a major producer of oil, because we have to pay. Doesn't matter where you are in the world. You have to pay the global price for this commodity.
Sure.
Natural gas is very different. Natural gas, there is not a global price for natural gas because of the nature of the product, the way it's transported, the way it's used. But because oil is so easily transportable around the world, it's a liquid. You can put it in a boat, in a pipeline. It has become a global commodity. It has a global price. And so I realize it's hard often for Americans to understand, why do I have to pay a global price because of a war in Ukraine when we produce so much oil in this country? Well, unfortunately, yes, we do, but that oil goes into a global industry, and we have to pay that global price.
Sure. Well, we're slowly working down on the clock. We have time for a couple of more questions. It appears industry and society in general are not overly receptive to moving away from oil to an alternative source of energy. Is that a basically true question? True statement?
We are. There's no question that we are in an energy transition away from fossil fuels. It is happening, but it will take 3, 4, 5, 6, 7, decades to get there. It's not going to happen overnight. And again, it depends on what particular use we're looking at. For transportation fuels, well, we're going to see electric vehicles. They're coming. We already know they're coming. And there's a lot of challenges to the infrastructure. Airplanes, well, that's going to take a little bit longer. Electricity, yes, we've got wind and solar, but we've got some challenges. The great thing about oil in particular is it's what we call energy dense. For a small quantity of oil, you get a tremendous amount of energy. And we don't have any other product yet in the world that can do that. We have some biofuels, but they are such small quantities, they're not very useful. So, I don't think society is for or against oil. We just want to have a good quality of life and affordable energy. And tomorrow, electric vehicles and solar and wind are there and they're affordable and and I don't run out of electricity, I think people are absolutely in favor of the transition.
Will government force this transition over time?
I don't think they can. I don't think they can. They can nudge us. They're trying to do that. If you buy an electric vehicle, you get a tax credit. So that's a nudge from the federal government. But ultimately, it will be market forces that determine where
to drive that.
Yep.
Well, Andrew, I have one more question for you. I ask you to put on your forecasting hat and tell us when the price of gasoline at the pump is going to drop back down to a level that we saw a year or two ago.
It's a big question. I think the biggest factor right now is the war in Ukraine. And as long as that war continues to continues to go on, and Russian oil is partially removed from markets, we've got a constraint on supply. I mean, there's other oil out there. There's Venezuelan oil, there's Iranian oil. The Saudis have excess capacity. But if I were to, my prediction is we're going to see high oil prices for at least a year and a half, possibly 2 years. I hope I'm wrong, but
Well, we do too. Thank you very much, Andrew. We greatly appreciate your time and effort to join us on our broadcast. That concludes this episode of Stringham Real Estate Edge. Today's program is brought to you by Stringham Schools, educating real estate professionals since 1989. Visit stringhamschools.com to learn more. We want to thank today's guests, and don't forget to tell us what you think in the comments section below. I'm Garry Barnes, and I'll see you on the next episode of Stringham Real Estate Edge.